Alright everyone, it's Wilson and it's time for my weekly recap results of my trading this week. So overall, made more than 6,500 this week in profits and I'm super happy about it, but there was a couple trades that I messed up on and it just messed me up for the entire day. I couldn't stop thinking about it. I was a little bit tilt, I was out of it. And sometimes a bad trade like that can just really mess you up. I mean, I'll go into a little bit more in detail when I go through all my earnings and everything about why I messed up on that trade and why it hit me so hard, even though I do get my losses and I do get my red days. But that one just hit me extra hard. And it was something that I had to get over. But you know, that's a part of trading. You're going to have your ups and you're going to have your downs. And this week, luckily, overall, I'm up. But some of these trades just blows your mind out. So let's start off with the very first one in the early of the week. I traded ECYT. I heard about the news. I jumped in on this first day runner, and I think my mistake on that trade was that I exited a little bit too early. Usually, it's okay for me to exit a little bit early and take my profits because you know they always say profit is profits, but for this one, it actually continued to run on for multiple days at like 3x the price that I exited at. So I think I got out a little bit too early when I could have watched it a little bit more and should have just set a stop loss. But overall, profit is profit. I took a good position size of 2,500 shares and I thought it was a pretty good trade that net me about $900. Um, so taking a look at ECYT, we're looking at the 5-day right here. So I got in at 184, which was on the first day runner when it was rising up. Somebody called it out in my chat room. I saw it, and you know me. My trading style, if you watch my other videos, is I like to see either two signs of greens, two to three candlesticks of green, or a pullback, a major pullback onwards, and then that's when I like to take my position. Usually, after for a stock that has really good news like this, a good catalyst that you know is going to spike, and you see the volume on the bottom kicking in. Usually, I wait for the first pullback. Ideally, I wait for a harder pullback so it hits a little bit lower, and then as soon as it starts going back up on the second green candlesticks, I like to get in. But this one, it was already on an upward momentum, and it didn't seem like it was going to stop. There was no consolidation. So I got in and I rode it all the way up till about the top before the pullback of the day, the main pullback, and I got out. But I didn't get back into the trade later on in the midday. As you can see, after it consolidated, you know, it pulled back a little bit, went back up, and it consolidated. Then it started to spike upwards, and at the end of the day, it just reached a new high. So I exited at like $2 something, but that could have easily been at its highs at close to $4. So I could have traded it again midday and I could have bought back in and watched it go up. But from my experience trading these type of stocks is that after consolidates is it usually just doesn't continue to run. But for this one, it was just very special. And then as you can see on the next couple of days, the after hours just pushed it upward and this became a very hot stock for actually the rest of the week. I mean, all the chat rooms were talking about it and stuff like that. But I took my profit early. I think I exited a little bit too early because I could have bought back in as soon as the consolidation was over. It looked like a bullish flag that it will continue going. That was my mistake on this trade, but you know, profit is profit. $900 is $900, and it's a great way to start the week. So my second trade was a Snapchat. So this was a swing trade. It wasn't a day trade. It wasn't momentum like you know buy in buy out type of trade. It wasn't as exciting. But the thing about Snap is if you take it's a stock that I love to trade. It's just my style because the patterns repeat itself. History always repeats itself for this stock. It never goes too low and it never goes too high. So if you can kind of grasp what the support level is for the entire time. So if we look like 20 days back, right? The lowest has been was 1307, and then it slowly climbs its way back up. But that's not what we're looking at. The main thing that we want to see, especially for me when I'm looking to swing trade something like Snap, which I really love to do it, is because you see all these little U-shape up and downs, up and downs, up and downs. So each time you catch it at a down, it's gonna go back up, and then it's gonna be like up and down, up and down, up and down, up and down. So I caught it as an alert for one of my trending stocks when it was at one of the lower points, the lower supports. And I knew it was going to go back up. It was just a matter of time. And I had the capital in my account to kind of put aside for it to last those couple of days for the swing trade. So I didn't need to play a momentum trade. And I love trading this pattern. Like I said, it's always up and down, up and down. And as you can see, the highest a while back was like 1575. So I knew I had a good target. But then on the day that I exited, it started to go on a very upward trend, and I was worried because with Snap, as you can see, is always up and down within the same day. So one day is always up and down, and then the next day it goes really low, and then it goes back up. So I was worried that when it hit 1491, which was close to that day's high, I think that day's high was like 1495, but I was worried that there will be a lot of shorts kicking it, and then the next day I just don't have the momentum. So I didn't want to hold on to it for too much longer, and I exited with a profit, and that was only at $200, $220 in profit with a smaller position size, but it's a good swing trade, and I took a little bit of profit, so profit is profit. Now XRES, the next one. This one's a little bit more exciting. This is a really hot stock that's been talked about across all chat rooms again. It's in the AI space, very hot sector to be in. And as you can tell, it was up and down, and even until Friday, people were still talking about the stock and talking about getting in possibly, even though the volume died out, it dried out. But I pretty much caught this on an upward trend. So I got in at 286, exited at 312, and why I think this stock was really unique is because I actually don't think I made the best play on it, but I was super confident about this stock because I looked at the past, the last couple of days that I traded, and this was so this is a 5-day chart right here, but if you look a little bit further back, let's just say 10 days, you can see that most of the volume kicks in at the end of the day and at the very beginning of the day. So it's after power hours. And like I said, I didn't make the best play on the stock because I got in, I think it was at 288. So let me zoom in. See right here now. So I got in at, I think it was right here at this spot, a couple hours after people were talking about it at around 288, and then hit its highs at 3.03 before the pullback for this resistance and support level. And I didn't sell. Usually what I do is I would sell for my profit, or as soon as it hits a pullback, then I would cut my losses. Even if I sold right here at 290, I would have still made like I think 2 cents, right, like per share. So but I didn't do it, and the reason why is because I knew that some sort of volume will kick in towards power hour or towards the end of the day, because I saw the trend from the last 5 days before I got into the stock, and it's always been like that. It's always the beginning of the day where the volume spikes, and towards the end of the day or near the end of the day. So I actually held it through all this consolidation and all these dips, and then I was waiting for it to jump back up, which I exited at around 312 if I remember correctly. So that was in the same day, but it was hours later, and that was only possible because of me seeing the past and how this stock actually moves. Usually for these type of situations, if I see that the stock just consolidates a lot and there's a lot of up and down in the same levels, I just get rid of it because it's like a dead stock, right? Especially with no volume, that's like a dead meat to me. It doesn't really matter how popular it is. But I know from the past that momentum can kick in, and if it doesn't, then I would have sold by the end of the day anyway. I didn't feel comfortable holding this stock, and as you can tell, moving on to the next day, it dipped like crazy. So I mean, it was a good choice for me not to hold on to it, but I just knew that it could go up. If it went towards the end of the power hour and there was still no movement, then I would rather just break even on it and not make and not hold it overnight. This is not a stock that I like to play overnight, especially when there was just so much spiking up and down and so much volume in the beginning of the day. So moving down the list was COSN, another very hot stock. It was being called out everywhere. I knew I just had to get in. I got in on its way up. There's really not too much to talk about the stock. It was a few days runner. It wasn't just a 1 or 2 day pump and dump type of thing. I got in at 1,500 shares and exited at 2.81 for $615 in profit. This stock actually continued to soar higher again. It was just one of those things where I just took my profits early, and I felt like, if another man stuck in and continued to go up, that's their profit. I know I could have made a lot more, and it probably wasn't the best choice to exit so early. But for me, that's just my style, and I like to stick with my strategy because if not, then it goes wrong. Moving down to the next one, iPass. This was a bad trade by me. It was one of my failed trades of the week but it didn't hit me so hard as the ones that I'll be talking about a little bit later down the list. But iPass, basically what happened was that I traded this stock because it was a call out. I heard it from one of my chat rooms again, and I shouldn't have traded the stock because I knew nothing about this company. It was a first day runner. It just boomed out of nowhere midday, and I caught it on its way up. I thought the volume would just keep spiking on the power hour and go higher, and I can probably just quickly squeeze for like a 20-cent profit or 10-cent profit. The stock had zero news. People kept saying it was a good company, and I just got out of my way and traded the stock. I usually don't do that. I don't trade stocks without any type of catalyst or at least a really strong fundamental background or some good charts. I mean, it was just like a pop out of nowhere. And I ended up taking a loss because it dropped slowly afterwards. It was like a slow death. But lost about 110 on that trade, 10 cents. Wasn't too bad, but never again. Next one up is AMD. This was a swing trade. Again, if you look at AMD's chart, AMD is very, very similar to Snapchat. The patterns are always up and down, up and down, up and down, up and down, up and down. And the thing for me was that I know that the stock has a lot of news. This is a stock that I'm really familiar with. I've been trading it multiple times, as you guys can see from my previous videos. I've always swung the stock. It's never been a day trade. And it's like when it gets to its lows, what you gotta do is you just gotta wait. You gotta wait for some sort of news because AMD is a company that has a lot of partnerships. They do a lot of like crypto mining. They always have some sort of news that will spike the stock up, and then it goes dry and it dips and it dips and it goes back up again and it tanks. So luckily for me, I caught it at its lows. I was watching it, and then I swung it for a couple of days until it reached its high when they released some new news. And from there, I took my profits. So it was just another swing trade, nothing special. But if you look at the patterns and you look at the trends from the history, it rose exactly like Snapchat. And I got in at 1,000 shares for $780 in profit. Now, the next one on this list is RGSE. This was a runner. I think it ran for like 2 days. I enjoyed the stock a lot. I got in at 2.2 and exited at 2.56 for 1,200 shares, and it was a quick $400 in profit. It was just an in and out roll for me. Again, this wasn't a stock that I knew too much about, but I knew I can get in for a quick squeeze for this specific one. Like it was just crazy. It was the first of the day popper kind of thing, and it was on a roll, and it went up, all the way up to 3.25 actually, at its highs. So I mean, again, it could have been an easy, too quick of an exit for me, but I like to take my profits, and like I said, if there's another man that's in it until 3.5, much props. But my profit is my profit, and having a small win to me is better than not having any win. So moving down to MTBC, this was the stock that it was just my biggest mistake. I mean, it just killed me. It wasn't even so much about the money. It was mainly because I felt like I could have profited from it because I didn't sell. when it hit 530, which was its highs. I got in at 488, and a massive short just came in and dropped it. And the worst part was I actually held on to it after it dropped. Usually I set my stop loss, or I have a mental stop loss, and I cut my losses. But for this one, it was a speechless. I didn't exit the profit, and I kept thinking it would go back up. And that's such a newbie mistake, because as a day trader or a momentum trader, swing trader, whatever, you should have your strategy and you should stick with it, which I didn't. I usually cut my losses. I was chasing it, and you should never chase a stock. I mean, a loss is a loss, but if you cut your losses early, then it wouldn't be a problem. So looking at MTBC, I'll tell you guys exactly what happened. So it was just so bad. So basically, I got in. Let's see if I can get in this a little bit more. Zoom in a little bit more for you guys. Show you guys the action. So it was on an upward trend, right? This thing was going to go. I thought it was going to keep going higher, especially looking at all the stocks that was trading in the sector in the same week. It didn't stop running, and it really didn't. So I already got in kind of late, to be honest. But I rode it all the way up till it hit its highs, which was 5.44. And I didn't sell. I didn't set a stop loss. Then, like I said, this massive short came in, and I was like, oh, maybe it's just a pullback. So it consolidated. And usually when there's a pullback and it consolidates, it's going to break back up. And it's going to continue to run for the rest of the day. I was hoping it would go up to like $6, $7. And then another massive short came in, followed by a couple more. It dropped me down all the way. And I should have just put a stop loss at like 455 or something and let it go. But I let it drop all the way down, and I still didn't exit until the second red candle, and it dropped lower. And then I was like, maybe it'll come back up, and it dropped a little bit lower. That's when I was like, okay, I need to call it a quit. And that's when I exited. But this was just such a newbie mistake. Don't chase. Don't pray that it will go back up. Cut your losses early, because if you get in 5 trades a day and 2 of them goes bad like this, but you cut your losses early, and the other 3 wins, then you will still be profitable for the day. But that was such a newbie mistake, and I just kept slamming myself. I was out of it the entire day because I could have actually took profit. I could have sold at like 530, 535, but I didn't, and I kept holding it and kept praying, which is such a bad move and such a newbie mistake. So that one threw me off, and it was terrible. But the next day I recovered by getting in Mankind. Mankind was a runner. It was a runner. It was a very popular stock. I mean, as you can tell, it ran all the way up to 6.51, and it continued to hold its gains. I mean, even until the next couple of days. But for this specific one, I only got in at 900 shares. Usually for a stock like this, as you can tell from my previous trends, I usually get in at above 1,000 shares. I didn't do it for this one because I was recovering from the MTBC drop. And usually when I have a bad trade like this, I want to reevaluate my situation and try to take notes of what I did wrong and how I can improve. So I try to get in a small position the next day. But this was a runner. I mean, $2 easily. So normally I get in bigger positions, but I played a little bit more cautious, got in. If I got in at like 2,000 shares, I would have definitely doubled the amount of profit, but I still clocked in almost $2,000 in profit from Mankind. So it was a good one. Next, GNC, man, this thing just didn't stop, And again, it was in the same day as Mankind. So I was recovering, and I didn't take such a big position. I only took 500, tested the waters, and had a small gain of $115. Nothing too much to talk about, just rode the wave upwards and before it dropped again. So I followed the trend and did my thing for a little small win, but I was still recovering and being a little bit more cautious. Now moving on to Friday, man, this was not a bad day as well. LINU, another very popular stock that ran like crazy, but this time I was feeling more confident because on Thursday I was able to kind of regroup back my loss and feel a lot better. This thing was a runner, right? It actually hit 3.2, and I exited to take my profits when I saw that there was a red candle. So I was worried that it would be the MTBC situation again and drop like all the way back down. So I didn't let it run. I didn't buy back in as well, but I was able to take the profit. I got in pretty early when somebody called the stock out at 1.55, and the volume was there. I saw the volume. I knew it just wasn't going to stop. It kept going up. It kept going up, and I knew that this was going to be like a whole day kind of thing. So I got there, and even after I exited and took my profits, people were still talking about this for the next couple of hours, and then actually it hit 3.2, and then it dropped. It had to pull back, and it actually went back up to 3 again. So this was a very strong stock, especially with the amount of volume and low flow. As I said, always trade stocks that have high volume and low flow. But that was my play over there. Took my profits, and I didn't get back in the day. Usually because I was looking at other stocks and I was busy with doing something else, usually what I would do is that I would like to wait for the pullback. So if it drops all the way down to 2.39, I usually would buy back in and wait for like a midday or power hour push back upwards. Usually with stocks like this with so much volatility, it will run the entire day. The volume will be there, especially towards the end of the day, and it could be an end day runner. Since we don't see too much history, we don't know. It could be an end day runner, and that's why I love to, if I sold for profit, usually I would like to buy back in on a massive dip like right here at around the 230 mark and push it back up for another like 70-cent gain on another trade. But I didn't do that on Friday because I was watching a few other stocks and I was busy doing something else. But that was that play. Now, JNUG, same thing. Swing trades. When it comes to swing trades, you have to either have really good fundamentals of the company, and you have to analyze the technical trends, right? You have to have both because you're not day trading momentum. So it's the same thing. I bought in at its lows, not at the very, very low, but at its lows. And this is a stock, is an ETF, 3X ETF. It's going to go up and down, up and down, up and down, up and down. And I love swinging these stocks. I love swinging stocks like this. I love swinging stocks like UGAS. All these stuff that just rise the economy, because economy is never going to be the best forever. It's going to drop and then it's going to recover. That's how the world is. That's economics, right? That's how Forex and all these other stocks run. So, I bought in. I think it was a pretty good low entry point for me, and then I just wrote it. And yesterday it was a runner, so I took my profits, and just 500 shares for $580 gain. So not too shabby. But yeah, those are my trades. Another position that I'm swinging right now is GoPro. They got hit hard because of Google releasing its chips, but GoPro is one of those stocks that's going to go up and down, and it's a really solid company. I mean, there's no joke. They have a lot of loyal fans, and the holidays are coming. I don't see this being a $9.6 stock, but that's where I bought in because it was very low, and I think now it's like at 9.80 or something, but I'm sure it'll go back up to 11, especially with the holidays kicking in and earnings and all that stuff. So that's a stock that I'll be swinging, and if it gets up to the proper point, I will take my profits like always. And if it drops again, I'll buy back in. That's the way I trade, and that's my strategy, and I'm always trying to stick with my strategy. So moving forward, a little note to myself is that don't chase. The MTBC was just such a bad chase. Don't make those newbie mistakes. And don't trade stocks with no news, trend, or volume because it just becomes like a dead meat. Well, anyways, I hope you guys enjoyed this video. If you liked it, please give it a thumbs up. Subscribe to this channel for more updates. And you can always follow me on Twitter at itswilson8. Take care. Happy trading.